Good morning everyone and welcome back to Morning Markets on Wednesday the 31st of May. Today we're going to be discussing the latest inflation prints for the Eurozone, the divergences within, and we're also going to update you on the latest activity data from mainland China. So before we start on Eurozone inflation, let's update you first of all on the US debt ceiling. An important bill passed the first hurdle yesterday in the lower house, and it looks likely that the bill will go to the floor today for a debate and then the vote, which will allow it to go to the Senate to be then passed on to President Biden for signing. So it looks likely that the major hurdles for the US debt ceiling issue have been cleared. And that's good news for markets going into the month of June. Now, Eurozone inflation. What we're seeing now is actually downside surprises in Eurozone inflation across countries, with Spain leading the charge. Spanish inflation came in below expectations, below 3% for the month of May. Now, Spain is leading the pack, but France and Germany are lagging somewhat, but again, we're seeing falls there. French inflation came in around about 5.5%, and the regional surveys in Germany point to price declines there. And that's because we've seen negative prints for the month of May in Germany, France and Spain. So this actually points to prices are actually falling in these countries. So this largely indicates that we've seen the peak in price pressures in the Eurozone, and we're hopeful that further price pressures downside will build as we go into June. Now, Chinese activity data for the month of May has come in, and it points to a slowing economy there. Bear in mind, most optimism in markets was for the Chinese economy to lead global growth post-reopening from COVID lockdowns at the end of last year. And that was largely the case through Q1, but what we've seen here from these updates is a material slowing in many components of both the manufacturing and services industry. So what we would say is that if we put aside business optimism and business sentiment, there's evidence of small recessions in the manufacturing and services sector there. Now, it's to be expected that there's a slowdown in the manufacturing sector because the global manufacturing cycle is slowing quite quickly following the reopening in the West. And it's only natural that as consumers move from goods to services in the Western reopening, which is well underway, that the manufacturing cycle dips somewhat. So we're seeing contraction in new orders, in prices and output, and in sales in China. However, somewhat disappointingly, we're also seeing similar in the services component. And this is important because we know that Chinese officials were hoping it could be the services sector which led the rebound in the Chinese economy, that by keeping monetary policy very loose, interest rates low, and allowing the economy to recover through credit expansion, that perhaps the services sector could rebound. And that happened somewhat through the first 4 months, but there's been a clear slowing. Again, we've seen output contract in the services sector, new orders and sales declined, as did prices. And recall that China has one of the lowest inflation rates in the world. Inflation is closer to 1%. Compare that with the US, which is around 5%, and the UK, which is around 8%. So with interest rates so low and very little price pressures, it's surprising officials somewhat that the Chinese economy is struggling to recover from COVID. Now, please join us tomorrow, where our CIO, Jeff Casson, will update you on further inflation prints from the Eurozone and round up the month of May for you. Thank you.